Hey everyone, and welcome to Wellness Wednesday. I'm your host, Jason Vita, the founder of Frugal and author of two books. But my recent book is Happy Money, Happy Life, a multidimensional approach to health, wealth, and financial freedom. You can go get yourself a copy in that link that you see below. But today, I want to start off with kind of checking in with yourself. I think it's important for us. This is Wellness Wednesday, so wherever you are, I want you to check in on yourself. And we're going to do this by taking a moment of pause, a moment for breath. And so I want you to sit up nice and tall, kind of lower your shoulders, roll your shoulders back, put your palms towards your thighs, and take a nice deep inhale through your nose. And then exhale with a sigh and release. You're probably feeling a lot of tension because there is so much going on in the world. And when you do that, inhale and sigh, exhale, that's a breathwork method. You're going to feel a lot of the tension in your neck and your jaw and your shoulders kind of melt away. And so again, doing the nice inhale through your nose and exhale with a sigh. Allow yourself to take a moment because today we are going to talk about the banking crisis, and it is all over the news. Everyone is talking about what happened with Silicon Valley Bank, what's happening with banks in general, and it's causing a great deal of stress. I've spent a good amount of time trying to calm people's fears, trying to calm people down, because there are a lot of sources out there that is spreading a lot of misinformation, and it's causing people to panic, and it's creating more undue stress. And so I want to kind of bring it back. I want us all to take a step back so we can reassess the situation, so we can all respond more appropriately and accordingly, as opposed to reacting. And interestingly enough, I feel like we've been in this situation before. Not feel like it, I believe we have been, and that is the 2008, 2009 crisis. And so I feel like I am living in kind of like this cyclical nature of things happening over and over again because we haven't learned. And so, with that said, I do want to give some context on why we are talking about this banking crisis. And I put it in quotes because, again, I'm following this to have a better understanding so I can talk about it intelligently. And I know many of you are trying to follow it, but there's just so much information out there. And so, here is what happened with SVP. SVP is Silicon Valley Bank. It is a niche bank that focus on helping entrepreneurs and the startup tech world with banking and financing. So they offer products and services to a very specific group of people and businesses. And so what happened is that this bank, which was about $40 billion in assets, give or take, back about 3-4 years ago, got an infusion of deposits as investors were putting money into the startup world through the pandemic, and it grew from 40 to 200 billion dollars in assets. And so the management team needed to figure out what to do with that infusion of deposits, and so they started investing it into low cost, or like really like to bonds. And what happened, as we know, with the Fed increasing the interest rates, you're probably hearing about that too. It made these bonds, which were probably taken for long term at very low rates, pretty much losing value. And so they were looking at SVP, were looking at kind of shoring up their income statements. So they were going to issue shares, and they're trying to raise money. And so this information was shared by a number of venture capitalists, and people went to the bank and started withdrawing their cash. They thought that there might be an issue with Silicon Valley Bank, so they went in droves, and billions of dollars were withdrawn within one day. So that caused a run on the bank. So a run on the bank is essentially when group of depositors go to the bank and they want their deposits out. And it's important for us to understand that a bank, if you're a 200 billion in asset bank, you don't have $200 billion sitting in the bank vault somewhere. that 200 billion, a good portion of it is invested so the business, the bank, the financial institution can earn some kind of income with it for its operations, for its payroll. And so when you have a tremendous amount of depositors wanting their money out of a bank, you are doing a run on the bank, and the bank does not have enough liquidity, does not have enough available cash in order to satisfy the withdrawals. So that causes a collapse or a liquidity issue. And what happens in this situation is that the FDIC, which oversees banks, they take over and essentially says that the bank is a failure. It's a bank collapse. And so there is good news. The good news is that the government has decided that no depositor will lose any of their money, and they are doing a backstop. And so that's something that I'm going to talk about because it is very unique. This tends to not happen. We do have deposit insurance for all banks who participate in the FDIC program, where you are insured up to $250,000 on your deposits. And there are tricks that you can do to get insured for more than $250,000 in with your deposit in one financial institution. And that has a lot to do with the ownership and the titling of your bank accounts. Now, in this case, you're talking about businesses and entrepreneurs. Well, businesses and entrepreneurs have millions of dollars sitting in the bank. And so if they're withdrawing millions of dollars and the bank does not have the physical cash or the liquidity in order to satisfy it, it causes the collapse. And then eventually the word spreads that this bank has failed and people want their money and there's no money available. And the FDIC steps in and says, they are insured up to 250K. And people are panicked because they have more than $250,000 in there because they have their business money in there. And so the government, under the Federal Reserve and the U.S. Department of Treasury, decided they're going to do a backstop, and then no one's going to lose their deposits. So that's a good thing. And they've also said that they're not using taxpayer dollars. So the money that's going to fund the backstop is going to be the fees they collect from participating financial institutions in terms of their premiums. And so what that means is that they are going to charge the banks, particularly probably local community banks, a bit more money in premiums in order to cover the backstop for Silicon Valley Bank and Signature Bank. And so that does have an effect. And I think it's a good thing because we never want people to lose their money. And a lot of these startups do employ people, and they need to be able to make that payroll and for people to get paid so people can pay their bills, so people can live. So I'm not arguing against it, but I want you to understand that everything is connected. And I think one of the things that frustrates me and probably is frustrating you is that these things tend to happen over and over again. And what happened with SVP? Well, with SVP, my opinion, based on my opinion and based on the information I've read, the issue with SVP was poor management. It was poor risk management, if they had anything. So basically, there were things that they were investing in instruments that, in an environment of increasing interest rates, is going to be devalued. And of course, it's going to cause some issues. And essentially, it falls on the management team, the C-level suite, and things like that. And so I think it's important for us to understand the importance of regulation, the importance of governance when it comes to financial institutions. And I think that is one of the biggest issues. And there's a lot of talk. There's a lot of talk if this is going to happen with more community banks, with local banks, with small banks. And I think that is a lot of fear mongering. I think it's important for us to go and see what is happening out there, but also to kind of take a step back. As I mentioned, it's important for us to take a step back because we're just going to react. And often it becomes a self-fulfilling prophecy. And so it's not about just kind of waiting for something to happen. It's just assessing the information that it's being presented to us and making a very rational and logical decision. And right now, what I want to focus on is calming your nerves. What I want to focus on is reducing your stress level when it comes to this banking crisis. And with that said, I want to jump in and kind of talk to you about your deposits. Are your deposits insured? And I think this is a really good topic. So banks are who participate, and you're looking at the vast majority of them are insured by the FDIC. That is the it's a government aligned state agency, and that regulates banks across the country, and they also insure deposits up to $250,000. So if you have $250,000 in your savings account, your checking account, in total, you are safe because the FDIC guarantees that you will not lose money up to $250,000. Now, there are ways around this. So if you have an account that's under your name, you're insured up to 250,000. If you have an account and that's a joint account with a partner or a spouse, well, that's insured up to 500,000. And so there are ways around this to increase your deposit insurance, and I'll link it to the note so you can figure out how much you're insured up to. But the truth is, most people do not have $250,000 sitting in a bank account, in a savings account, or a checking account. And so that's why, as I mentioned, it's a very unique situation for SVP and a lot of these banks that deal with entrepreneurs and the startup world, because there is money related to business operations that's out there. And so if you are with an FDIC insured bank, your savings, your checking account, the money that you have deposited is insured up to $250,000. Now, if you are with a credit union, well, there's good news too. A credit union is a financial cooperative. You are also insured up to $250,000 with your savings and your deposits into the account. So that leads me to the banking alternatives. So, do you have banking alternatives? And I think it's really important for us to understand that you have options when it comes to financial services, when it comes to checking debit cards, when it comes to savings accounts and things like that. You do have options. And I think most people don't consider credit unions. Credit unions are financial cooperatives. They are not for profit financial institutions that offer many of the same banking services and products you come to expect with the traditional banks. And I am a big believer that when you are building your financial portfolio, that you should have diversification of your banking. And a lot of the people will say, a lot of financial gurus will say, oh, yeah, you want to simplify and just have one primary account. I have been a proponent of diversifying your financial life by having a primary and a secondary account, and even sometimes a third kind of account out there. But I'm a big believer that you should have a credit union as part of your financial portfolio. Credit unions, as I mentioned, they operate differently than banks. They are not for profit. They are governed mostly by a volunteer board of directors. You are not a customer when it comes to credit unions. You are a member owner, and your participation within the credit unions matter because it is a cooperative. The more business you do with a credit union, the stronger the credit union can be. And so you do not have shareholders, you do not have investors in a credit union trying to make money and trying to profit. And I think that is one of the biggest differentiators when it comes to banks and credit unions. And again, too, whether you bank with a big bank or a local community bank, consider a credit union as part of your financial portfolio and start to understand why you should be part of a financial cooperative. Again, this not-for-profit financial services company, organizations that offer you checking, debit, savings, credit cards, loans, what have you. And so that is where I am. So if you have any questions, just let me know. If you don't know, I'm a big advocate when it comes to credit unions and when it comes to wellness. And with that said, I want to introduce, for today's Wellness Wednesday breathwork tip, is the alternate nostril technique. So what this means is that we're going to inhale through one nostril and then we're going to exhale through the other. And so basically, if you can, try to see if you could do this with your fingers. If not, you can just use your thumb and your index finger, and you would breathe in through your nose switch, and then exhale through the other nostril. Did you get that? We're going to inhale with one nostril, close one side, inhale through the other, and then switch, and then exhale. Inhale through that same nostril. 1, 2, 3, 4 seconds. Then switch, and then exhale through the opposite nostril. Get that? So I want you to do that 5 times. So it's going to be 5 times on each side. So again, it's inhale through one side, switch, exhale through the other, inhale, switch, exhale. That is alternate nostril breathwork technique. It is a great way to calm your nerves. It is a great way to reduce stress. You're gonna start feeling better when you do alternate nostril breath work. And here's the thing. You're probably gonna notice when you inhale on one side, it seems like you can inhale more air, and then on one side and on the other nostril it's very difficult to inhale. Here's a really interesting thing. Your body switches in terms of the dominance of your inhale. So one nostril is inhaling more air than the other nostril, and it switches. So I can't remember the minutes, but 20, 30 minutes from now, if this nostril is inhaling a lot of air and this one seems like you're struggling, try it 20, 30 minutes later, and you'll notice that the opposite nostril is bringing in more air. And that's just a wonderful way of understanding our body and how our body works. And so don't be alarmed if you're doing alternate nostril breath work and realizing, wait a minute, I can breathe well on one side and the other side I'm struggling a bit. Again, that's just how the body works, and it's going to switch. It switches every single moment, or every 20, 30 minutes, or even an hour. I should probably research that. But don't be alarmed if that is the case. I ask you to try it. Let me know in the comments below what you think. And also, if you haven't gotten my book, check it out. Happy Money, Happy Life, a multidimensional approach to health, wealth, and financial freedom, where I talk about the 8 wellness dimensions: your mental, emotional, physical, spiritual, social, occupational, environmental, and financial well-being, and how money weaves itself into these dimensions, and how you can use money to buy happiness by spending on wellness. Again, I want to thank you all. I ask you to connect with me on social media, on Twitter, on Facebook, on Instagram, and also come back every Wednesday where I talk about wellness to help you live healthier, wealthier, and happier. I'm Jason, signing off. Have a good one.